This video will introduce you to support and resistance. In this video, you will learn what support and resistance levels are, how you can identify these levels, how to draw support and resistance on your chart, that support and resistance are not always levels but can often be zones, the concept that support can become resistance and vice versa, how to trade support and resistance, what a false breakout is. Support and resistance is one of the most important tools in trading. It helps the trader predict future price action based on historical data. Support and resistance levels identify prices where buyers and sellers have previously entered the market in sufficient quantities to change the direction of the price. Support and resistance can be identified on a chart by placing horizontal lines where the price has previously reversed. Resistance can be seen as a ceiling where sellers enter the markets. Here you can enter short trades or close your long trades. Support can be seen as a floor where buyers enter the markets. Here you can enter a long trade or close your short trades. To draw support on your chart, find two lows where the price reversed back up and connect these two lows with a line. To draw resistance on your chart, find two highs where the price reversed back down and connect these highs with a line. In a ranging market, price encounters the same support and resistance levels several times before breaking through resistance or through support. Support and resistance levels can be placed at the high and low of the candles or at the opened and close. There is no right or wrong. It all comes down to what works best for you. The levels that are used for support and resistance are not set in stone. Sometimes it is better to use zones rather than fixed levels. As you can see on the chart, at the support, there was not just one level where the buyers entered the market and started to buy, but rather an area where they did. The same goes for the resistance area. There is not a single level, but a zone where the sellers came into the market. After breaking through support, very often the price can come back to this support level. When the price comes back up to the former support but cannot break above it again, this former support has become a new resistance level. This is when support becomes resistance. After breaking through resistance, very often the price goes back down to the resistance level. When the price goes back down to the former resistance but cannot break through it again, this former resistance has become a new support level. This is when resistance becomes support. In order to trade support and resistance, you first identify the levels. Because you are expecting such a reversal, you can go short at this resistance level. Put your stop loss above the resistance level. You follow the same process when looking to buy at support. Because you are expecting the price to reverse back up at support, you could go long when a support level is reached. You set your stop loss below the support level. Be careful when placing your stop loss. You do not want to set your stop loss too far above the resistance or below support, but you do not want to set your stop loss too tightly either. You may need to give some room for a false breakout. But what is a false breakout? A false breakout is when the price initially breaks out through resistance, but instead of finding support, it goes down beneath again, and the resistance level simply stays as resistance. Therefore, when you want to go long after a resistance level has been broken, you should consider waiting to see if the price breaks out and stays above the resistance level. The safest way to be sure is to wait until resistance has become support. As you already guessed, you can also have a false breakout at support. So in this case, the price breaks through support and comes back to this support level again to test it as a new resistance level. But instead of halting at this level, it breaks through again. Therefore, When you want to go short in the event that a support level is broken, you should consider waiting to see if the price breaks out and stays below the support level. The safest way to be sure is to wait until support has become resistance. That brings us to the end of this lesson on support and resistance. We have learned that support is where buyers start entering the market and reverse the price back up. Resistance is where sellers start entering the market and reverse the price back down. You visualize them by drawing horizontal lines on your chart at the highs and lows of the price. You also saw that it is possible to draw support or resistance on either the high, low of the candles or on the open or close. There is no right or wrong way to do this. It just depends on your preference. The support and resistance levels are not set in stone, but they are very often zones. Furthermore, you learn that often support can become resistance. And resistance often becomes support. You learn that you can sell at resistance and you can set your stop loss above the resistance level, but be aware of false breakouts. Also, you can buy at the support level and set your stop loss below the support level. Finally, you learned about false breakouts. That is whenever the price breaks out of either support or resistance, but fails to stay below the support or above the resistance.